remember, what's important about moving averages and why they're so important is that in order to have a moving average, you have to trade above and below that average over a period of time. That's what an average is. So when you have big deviations like this from moving averages, it is going to eventually lead to a retest of that support at some point. So here's what you need to know before the bell. Yesterday, again, kind of all good across the board, right? Bonds rallied, stocks rallied, gold rallied. It didn't matter what it was yesterday. It was kind of risk on day on that weaker than expected inflation report, because now this suggests that the Fed will cut rates, as I said, in September. Broke out above the recent highs, so the market sitting at all-time highs, closed at the highs yesterday, so very bullish there. But importantly, markets are extremely overbought now on a short-term basis. So that rally, while good yesterday, really pushed up overbought indicators into really very overbought territory. And I'm sure when we do this weekend's newsletter and go through our risk range report, as well as our market sector relative performance reports in that newsletter, we're going to see that most sectors and markets are both extremely overbought and deviated from their normal monthly ranges. And so that suggests you're going to get some type of corrective action. We're also getting fairly deviated now above the 50-day moving average, as well as that 100-day. Big deviation, of course, from the 200-day as well. So big deviations from these moving averages. And remember, what's important about moving averages and why they're so important is that in order to have a moving average, you have to trade above and below that average over a period of time. That's what an average is. So when you have big deviations like this from moving averages, it is going to eventually lead to a retest of that support at some point. Now, that was what we were talking about back here in March and April, is that we were going to, February and March, we were saying, hey, we're going to get a 5 to 10% correction to retest some of this support level. And again, we went through the 20, broke the 50. We're now back above it. So at some point here soon, I would expect, and potentially even starting today or next week, whatever it is, we'll get some piece of news, whatever it is, that gives sellers a reason to sell here a bit, and we'll get a retest of this 50-day moving average. That would be a better opportunity to work off some of this overbought condition and add equity exposure to portfolios here for the next couple of months. Again, the trend is higher in the markets for now. So again, even though we've got some of this economic data that's coming out that is weaker than expected, we're in that cycle right now of bad news is good news for the markets, because bad news means the Fed will cut rates. That's what the markets are looking for. So again, the market trend is higher here in the near term. All bullish buy signals are in place right now across the board, except for the dollar. So we have a bullish bias to the overall market. So don't fight it. Just understand it, and understand that we're going to have some corrections here along the way, which would be better opportunities to add exposure. So again, if you need to add exposure to your portfolio, kind of play a little bit of catch up with the market this year, we potentially got another month or so of this rally before we get into the summer months, where we're likely going to have a correction before the election. That'll be our next set of conversations we'll have in the next month or so. But right now, this breakout, very bullish, suggests that the market's going to continue to move higher. But again, expecting a correction to add exposure to participate in that. That's what you need to know before the bell this morning.